Hello friends, uh, I prepared this video on the financial instrument to give the clarity about what is the meaning of the financial instrument, because it's very important to know about the meaning of the financial instrument. Otherwise it's very difficult to understand on which instrument IFRS 9 is applicable, correct? And even for the other accounting standards also, you should know on which instruments those accounting standards are applicable. See this financial instrument, so if it is a financial instrument, then mainly the IFRS 9, or you can say Ind AS 109 or 32 are applicable, and majorly it is used in the banking sector. So here the derivatives and the non-derivative financial instruments are also there. Mainly all the derivative instruments all the derivative instruments are the financial instruments, because it satisfies the conditions which are there in this which are mentioned in this slide. Okay, so before starting it, so I am just giving my brief introduction. Myself Sambhav Gupta, and I'm having around 13 years of experience in the mainly in the banking sector, like in the hedge accounting, impairment, and even in the regulatory reporting, the product control. So in all these areas I worked, and my qualification, I am a chartered accountant plus FRM and plus CFA level 2. Okay, so now I'm starting with this topic, the financial instrument. So here you can see the financial instrument. Basically the financial, here if I am seeing, so the financial instruments, so the instrument which are financial. So and you can see the meaning of the financial, like as a common man, as relating to money. Okay, so here as you can see here, I have mentioned the 3 points here: the contract, then the specified party, and the settlement. So the contract, for to become a financial instrument, you should have a contract, first thing. So this is the first condition. Then the second condition is that the contract, it should be between the 2 specified party. If the parties are not specified, then it's not a financial instrument. Like suppose if I have given the guarantee that those who are having a loss because of the earthquake, so they can collect the money from me. So here that the party who has suffered the loss or who will be suffering the loss, so that is not specified. So it will not be in the financial instrument. But if the party is specified with whom I have entered, then then this condition will be satisfied. The third condition is the settlement, how the settlement is happening. So the settlement, it should happen in the cash or in equity. And here also in the equity, it can be your own equity or maybe the equity of the other companies. So the settlement should be in the cash or in the equity. If it is in the other form, then it will not be financial instrument. And the form of the settlement here is the gross settlement and the net settlement. So in the gross settlement, it's 2 legs are there in this, and in the net settlement, 1 leg is there. So this I will explain later on in this example. Okay, so one by one I am covering this example here. So in total I have taken the 4 examples here. Okay, so here the building. So one by one I will be just checking the condition which I have explained you. So in the building, so if I am having a building, so suppose if I am S Limited. Okay, S Limited I am. So in my balance sheet I am having a building of rupees 10 lakh. So here if you see, it's not a financial instrument, because here I am not having any contract, like contract of selling the building for rupees 10 lakh or for rupees 12 lakh in the future. So if the contract is not there, then it's not a financial instrument. So it's a non-financial instrument. Okay, the tax liability of rupees 2 lakh I need to pay, means the S Limited need to pay to the income tax department. So here also, is there any contract between the income tax department and S Limited income tax department? Okay, so here there is no contract in between. So it's an obligation, like it's like if you are having a liability, then you need to pay it. So it's a responsibility of every citizen. Similarly, it's the responsibility of the company also. When if they are having a liability of the tax, so then they need to pay it. So here there is no visible contract here. So that's why, so if the contract is not there, so it's not a financial instrument. Okay. Now I am coming to the third example here. The third example. So here it's a forward contract to deliver 1 lakh pen and receive rupees 20 lakh from V Limited. So here I will be just covering here the gross settlement and the net settlement here. So just I'm preparing one diagram here for having the better understanding. So I am S Limited. Okay. So S Limited will be receiving from V Limited money, means cash, and delivering pen. Okay. So here the two legs are there, like one leg is cash, the another leg is pen. So if you see the first leg, this settlement, the settlement of the first leg is happening in the cash. So this is satisfied, but the another leg, it's not in the cash or not in the equity. So the second leg is not satisfying this condition, the settlement one, that is the cash or the equity. So we need to see in the total. So one is okay, the another one is not satisfying the settlement condition. So in total, if I'm seeing in the holistic manner, so here this condition is not getting satisfied, the settlement condition. Okay. The specified party, the second condition, so for S Limited, V Limited is a specified party. So second condition is satisfied. First condition, yeah, the contract is there. That is a forward contract. So first condition is satisfied. Second condition is also satisfied. But the third condition is not satisfied because the second leg, it is not getting settled in the form of cash or in the equity. So it's not a financial instrument. So here I have covered the example of the gross settlement. So in the gross settlement, the two legs are there. In the net settlement, suppose here the net settlement, it's happening. So again I am preparing the diagram. S Limited, V Limited. The cash is there. Pen. So the second leg is not there in the net settlement. So the settlement, it is happening in the cash. So if the price of the pen, so here I have taken the 1 lakh pen and the total amount is 20 lakh. So that means per pen it is rupees 20. So S Limited, after, so if this contract is after the 1 year, so here I am just preparing the, again for better understanding the diagram. So here I am standing S Limited. So after the 1 year, say now I have reached to the, at the end of the 1 year, and the price of the pen is rupees, say 23 per pen. So that means I am having a profit of 23 minus 20 into 1 lakh. So that is 3 lakh. 3 lakh I will be receiving. Means S Limited will be receiving, because here the price of the pen is more than rupees 20, which I fixed at the beginning. Similarly, if at the end of the first year, if the price is say 16, then S Limited would be paying 4 lakh. Means it's a loss. So here it's a net settlement is happening. So only the 1 leg is there, not the second leg. So now if the 1 leg is there, so now I need to see whether it is getting settled in the cash or in the equity. So here you can see it is getting settled in cash. So that means this condition is satisfied, cash or equity. Now the second condition is also satisfied because the V Limited is a specified party here. The contract, yeah, the contract is it's a forward contract. Okay. The fourth I am taking the example of the FX forward. So in the FX forward here, the S Limited is receiving rupees and paying in dollar. So both are in the form of money, both are in the form of cash. So it's a gross settlement which is happening, and second thing, for each leg it is getting settled in the cash. So it means this third condition is satisfied. The second condition is also satisfied because it's a specified party here, and it's a contract. So I think now you can have some clarity, or maybe having the better understanding about the financial instrument here. What is the meaning of the financial instrument here? Okay, just I'm giving you one more example where the settlement is happening in the form of equity. Okay, the forward contract is entered by S Limited with V Limited. Settlement is in the form of net, where the party leave this one. So the forward contract is same as it is mentioned above. The 1 lakh pen S Limited will be delivering and receiving. It's the forward contract, it is on the 1 lakh pen, and the strike price is say rupees 25 per pen. Okay, and the settlement is happening in the form of equity shares, same of Reliance company. So I am just preparing the diagram here. So S Limited and V Limited. Okay, so the net settlement is there, so it can be like those who are in the profitable position, so that party will be receiving equity shares. So suppose after this contract it is of 1 year. So at the end of the 1 year, those who are in a profitable position will be receiving the Reliance share. Okay, so here, and the settlement, it is happening in the equity share, the Reliance. So say suppose at the end of the 1 year the price is say 27. So S Limited is in the profitable position, so 27 minus 25 into 1 lakh, so it is 2 lakh. It's a profit. So S Limited will be receiving the equity share of Reliance equivalent to the price of rupees 2 lakh. Okay, so say suppose at the end of the 1 year the price of the Reliance is 2000. It will be receiving 100 shares of Reliance. Okay, so this if you see the conditions, the settlement, it is happening in the net. Then in what form? It's in the form of the equity. So now this is satisfied here, the third condition. The second condition is also satisfied because it's a specified party, that is a V Limited, and it's a contract. Okay, I hope this video is informative to you. If you like the video or if it is knowledgeable to you, so please subscribe my channel so that you can see my videos which I will be uploading in future. And thanks for listening my video.